Hi friends, after a long break, I'm trying to make a presentation so that you may find some of the few companies which may be interesting for you. It is not at all a recommendation. I am not a financially qualified guy, but on the basis of delivery data analysis, I found these companies are attractive, not for investment, for study purpose. So by telling that not for investment, if you find yourself it is a worth company, and I will explain on the basis of my observation, and many of the people are depending upon technical and fundamental analysis. So my approach is on the basis of delivery data analysis. So there will be a difference between common approach and my approach. This is a watch list made on 28th April of last trading day was 26th April. First company is Signed DLM Limited. If you look into this, you find many information about the company in this screenshot. On the basis of 26th April, this company is shortlisted, and it's an EQ series company. In BSE, it is B type company. It comes in the industrial product business. Last day, it was opened at 705, closed at 691, 1% lesser than previous day. And last all this open, high, low, and all those information are given. From BSE and NSE together, what is the number of trades, quantity traded, what was the turnover in crore rupees, then how much quantity is delivered, and for how much money. The delivery value means delivery turnover, and delivery percentage. Average trade over this, when you divide turnover with the number of trades, you get this value. Means on an average, for this much amount or for this many quantities were bought in a single trade on an average. And average price is the turnover divided by volume. This information is available for 1 week, 1 month, 3 months and 1 year. So you can have a comparison how the data delivery happens in this company. For example, this is traded at 15.52 crore, whereas today it is 32. Latest day it is 32 crore worth was delivered. Then with the March 2024 result, PE is 80.62. I go for 12 fundamental conditions while screening a company. One is PE greater than 0, then EPS greater than 0, then sales quarter greater than 0. That means many companies you will find there is no PE, there is no EPS or a negative EPS, and there is no sales also. You can, if you go to screeners and find so many companies are traded, though they are not into business. Then sales growth should be positive. So that with respect to March 24 results, this quarterly results, sales growth is there. Okay. Now coming to net profit, every business should keep make surplus. So net profit should be positive. That is the fifth condition which I keep applying. Then year on year basis, the business should grow. The profit should grow at least above minus 10%. Means some of the times the money is being spent on many other aspects. Sometimes for buying something or some adjustment. So minus 10% up to minus 10% I accept. But sales should be greater than year on year basis. It should be more. Then promoter holding pledging should be less than 10%, and unpledged promoter holding should be minimum 30%. The promoter should not be selling that holding during the previous quarter. Then next condition I apply is debt to equity ratio should be 0 to 1. Because of that, in many you are following me for quite sometimes, you may find that none of the banking companies are not coming into my screeners because debt equity ratio will be always greater than 1. So nevertheless, you may find that so many companies with this condition also there are successful bids which is coming on a regular basis. Then current ratio, current liability by current asset by liability, current liability should be more than 1, means the asset should be more. This is the 11th condition which I put. And return on capital employed should be more than 10%. So these are the conditions which I keep in my screeners. Though there is one company which wherein promoter has sold it, I have included on the basis of some other aspect. You may find it attractive, otherwise you can avoid. This is a chart made on the basis of my data, delivery data, BSE plus NSE. You supports and resistances are made in 2 colors. One is these are the expected support, and these are the expected resistances. So it may vary because according to your technical knowledge, you may find that the chart is not following your parameters. Where instead of RSI and all those things, I keep tracking the delivery percentage of the company and average trade worth. These straight lines will give you the average of annual average of this company's trade. So delivery percentage, if you see, delivery percentage is high, delivery turnover is high, and average trade worth is also high. This is a comparison of the first screen, but where one more thing I keep tracking, these first three bar charts, bars, you can find that company market cap to industry market cap percentage. Means when the whole industrial product for this company, industrial product company, companies listed in BSE and NSE together, its market cap percentage is 14.49%, whereas the company is able to create a sales of 22.72%. Means among the competitors, they are doing more business than their participation in the market. And debt, the third bar is that about company debt to industry debt ratio. Overall debt, how much is the overall debt of the industry? Out of that, 14% of the debt is held by this company, though debt equity ratio is 0.21, but total debt to percentage is 14%. Other things are already been mentioned in the first screen itself. Still, as a chart, I could present it. That is why I am sharing it here. And this is the major companies. Sometimes in some of the industries there are so hundreds of companies, so I am unable to accommodate in the bar chart. So here it is available, and you can compare that this company is having better data. This alone cannot be a condition for buying a company share, because sometimes you may find that this company may not be meeting all fundamental conditions. So sometimes they may be in loss, but this information is just as a comparison how among the competitors how good they are. Next company is SDBL. All similar data is available here. You can find the same information. Here delivery percentage is down, but delivery turnover and average trade worth is more. If you can study more into that company, you may find that it is an attractive company. That is why I have mentioned on this. This also is based on March 24 results. So you can, as I explained in the previous screen, you can compare the values. Okay. Similarly, in this case also you can find that the company is having a more percentage of transactions or sales when compared to its market cap. And next, see the next, as explained above. Sorry. Then ACC. This also March 24 results have been published, and it also shared. It also gave a good result. There is a growth of 158% in say net profit growth when compared to year-on-year basis, and debt to is, it is very low debt is holding. So next is this is the chart. So expected resistances are mentioned. The company, in if you see, this also has got a better participation in terms of sales when compared to its market cap. So their competitors, in this case more than 20 companies are there. So this is not meant. All the companies I could not accommodate in the screen. Then comes CAL Securities. This also gave a good result. Year-on-year sales growth is 48% and profit growth is 55%. I don't, since I am making only BSE plus NSE charts, I have taken this chart from other website, charting.com, and these are the expected support and resistance according to me. It is not that it should follow my predictions. Still, I am expecting that this should be bouncing back at this price. Here, if you see, the percentage is very negligible. This company is a very small company, so you will find that the company market cap is very negligible. Their contribution is also negligible. Even less than 2 decimals. That is why it is giving all 0. As such, if you check here, they don't have any debt equity ratio is 0 and debt is 0. That is why that value is also 0. Then comes Arathi Sarfakant. This also got a good result in March 24. The information is self-explanatory. I think you may find some of the interesting parameters in this fundamental area. Chart wise, if you see, this is the chart, and here you can find that average trade worth and delivery percentage is more than the average of whole year. And recently there have been accumulations. What I understand from this delivery turnover improvement, average trade worth improvement, and delivery percentage improvement is that there is accumulation happening in that counter. Here company market cap is similar kind, 0.1% is the market cap of this company, and 0.5% of the business is being done. Debt equity ratio, debt to the company when compared to industry is very negligible. It has got a profit growth of 82% for 3-year growth. So there are some of the interesting factors here, and FIA has increased their stake in this company recently. Yes, 0.05%. Now Berger Paint, this is based on the December result. The companies discussed hereafter will be based on December 23 results. This is an underperforming company according to me, though data looks good. So that is why I mentioned this company in this presentation. My chart is not updated because of corporate actions. So even it looks like it is at the bottom, but you should definitely study about whether the prices mentioned is attractive or not, whether it is investable or not. Without support and resistance, because this is the corporate action, some bonus was given. So that normally my database does not, I am unable to manage rather the price variations. It's not a commercial or an established database, so I am unable to manage it. But that is why I just to look to compare the delivery data, I just gave this chart. Here if you see similar kind market cap ratio is lesser, sales ratio is better, but debt wise also this company is having industry wise, when it compared, it is having a very good very high debt, though it is the debt equity ratio is 0.24 only, but when compared to the industry, it is holding 26% of the debt. So this is the chart and its competitors. Now Bombay Super Hybrid Seeds. This is also December result only. Chart is this is also listed in NSE alone. That is why I don't have a chart. So this is the expected support and resistances. This company, when compared to industry, it is having a better, higher market cap. It has grown sufficiently, though they have only very less participation in terms of industry sales. Now Dabur is in my consistent scanner because of the very high delivery percentage it is having, though the price has not improved at all during the last 1 year. This is also based on the December result, and RSI is oversold position. So you can just have just study about this company, and almost it is, in my view, this is at the bottom. Its sales participation is better than market cap participation, so it is to my outlook, it is an undervalued company, and it is not undervalued in other terms. I am talking about when compared to industry market cap and sales participation, since the sales participation is more, and 23% of the entire industry this company is holding, but debt equity ratio is 0.16 only, very negligible when compared to the debt equity ratio. You can see there who are the competitors and how their participation is. Then Innova ThinkLab Limited, it's a software consulting company. This also based on the December result. 520 is the price. Here also this company is listed only in NSE. That is why I am unable to get my chart. This is also negligible percentage of the industry it is holding. JK Lakshmi, this is also having a very high too. I have seen that recently delivery percentage has improved. This has also not grown to that extent, and though the last quarter results were very good. Debt equity ratio is 0.69. I am expecting some movement from here. Delivery percentage, average trade worth improvements are being seen in this company. This also has got a better industry, company sales to industry sales ratio when compared to market cap ratio. These are their competitors. Then KPI Technologies. Already this year it has grown 66%, but recent there is no much growth in this, and delivery wise it is doing a good. I mean, there is more attraction it seems. Result wise, December result was good, though PE is at a higher level, and FIAs have sold so more or less similar quantity has been bought by DAs. RSI is overbought. So these are the expected support and resistances. So I have drawn bit lower level. I think it should have been adjusted. When I copied into the presentation, I think this error has happened. And these are the resistances. Red line means red straight line shows that these are the resistances, and there is huge accumulation. It seems like very high delivery percentage and very high average trade worth. It's almost it's having only half the percentage of participation when compared to the market cap. You can see those competitors, and at the same time I just wanted to mention HCL Tech is one of my favorite company. It looks undervalued in terms of this chart, and it is also meeting this thing, and 9 consecutive quarters it is giving better results. Then Tembo Global Industries, iron and steel product. Last 2 results were very good, but however the price has not moved. That is why I just selected it. If this result also becomes better, I think there is a possibility. Chart shows it's almost at the bottom. Then this company is also having a higher sales ratio when market cap is compared. These are my companies which are in my watch list. So you may study much more in detail. You may find some of the companies as promising. I hope. Market conditions, it depends upon market conditions and that market risk. Kindly don't invest blindly. Thank you.